Thanks for the kind word of introduction. Ladies and gentlemen, good morning. Your title couldn't be more telling, because obviously the world is going wild. You know, normally in the book of human mankind we write page by page, but now we are writing a new chapter, so everything is transformed, renewed, reinvested, what have you. Some of you might remember that there must have been a proud Australian advertising industry. Now the digital window of disruption opened, then it closed, and now it's basically Google and Facebook. There are other industries which face disruption, is in full swing, which is retailing or e-commerce. So let's look at Jeff Bezos. He has a simple insight: your margin is my opportunity. So he pulled all the margin out of retailing with his e-commerce model. And this is 12 months of sales in the US. Look how dominant he is. He basically crushed everybody. He's coming to Australia. Now, our friend Jeff Bezos suffered from something I also know, which is that the IT infrastructure is always either too small or too big for a hyper-growth company. So that pain he turned into a business opportunity. He created an entirely new space, which is IT as a service. Few years into it, look at what they do. Amazon Web Services. They're growing 50%, while they are 3 times bigger than one of these other no-name companies, Microsoft. So visibly, the world is transforming, and this digital disruption moves from one space to the other. In my view, it is starting now to deal with manufacturing. One of my sons in Munich is in a he founded his own startup in the space. It moves to health. And it moves to banking. Why are they coming a little bit later? Because they're actually complicated. Complicated business models and higher regulatory complexities. So when I think about the one that I'm closer to, which is banking, I would like with you to look at it from the perspective of 3 players. Player number 1, all too familiar, is the regulated institutional banking, the oligopoly. Player number 2 is all these multiplying numbers of fintech startups, or fintech Tyros. Tyro is one of them. And the third one is what I call the new giants. Okay, let's start with the area that is all too familiar to us, the banking oligopoly. This is a list from the parliamentary review. Craig Kelly submitted it. Over 5 years, 8 major transactions, which dramatically further increased the dominance of the 4 major retail banks. How that is allowed beats me, but visibly they get away with it. And the result is $40 billion yearly net profit of the industry, which is outstanding when you think this is a small country, right? 24 million Australian consumers and, 2 million businesses are taxed $40 billion. It's a league of its own. Now remember Jeff? Oh, he said, your margin is my opportunity. So let's, for a moment, put ourselves into the shoes. You're in charge of one of the big retail institutions. I mean, you have a nice life. Basically, you're a mortgage bank. You know, your bonus is secure, your retirement is also secure. Basically, life is wonderful. If you had a headache, if you try to have a headache, you would think maybe one day there is enough political will and regulatory zeal to break up the banking system. So that would be a nuisance, because open data, open APIs, as pursued in the UK and by the European Commission, would deplete a significant asset which you have, which is the monopoly on your client's data, and this fenced interbank core infrastructure. So that would be annoying. So let's try to delay that and pay lip services. Another problem which you're very familiar with is they sit on legacy systems, so that's obviously an ordeal. And it makes it hard to deal quickly with changing user expectations. Now, they put a bit of digital lipstick in the front end, but still hard. And it certainly makes it very hard to deal with changing compliance requirements. So that's the headache, but like I say, you're not close to suicide because there are some good news. One is you will convince yourself that with people joining the banks, there's a new agile workforce that enters the bank worlds. They then will introduce simplified architecture, DevOps, continuous deployment, whatever. The stuff that the startup community is constantly generating are tools and methods that are also penetrating slowly the big institutions. Okay, so that might be good news. And the biggest great news is that you're so fat, your balance sheet is so wonderful, you have so much capital, that in the end, you can pick technology winners, take them out of the market, try to integrate them, or whatever you do, so that you can benefit from your huge franchise. Basically, you are unassailable. I think that has to be respected. I have a lot of respect for these 4 major retail banks. It's actually quite scary. Now, then you have all these fintechs coming from all these corners. We call them Tyros. Tyro is the challenger. The banks are the veterans. So these fintechs, they are obviously blessed with naivety, as we are. And they think, oh, we're so creative, we are so agile, the bank experience sucks, and so it's all right, yeah. And we can run this at a fraction of the cost structure. Yippee, and there we go. We get a lot of investment now, so there's a real cool momentum out there. But then, if you think about the longer term, how do we make it sustainable? Now, fintechs should have a headache, because at least at 3 fronts, it's not entirely clear, and there will be few, in my view, few great winners and lots of losers. Now, you would have lost it because you didn't appreciate the good old art of risk management, one of the major bank virtues. You wouldn't have sympathized with regulatory complexities. You would not have secured stable and low-cost fundings, as banks do with deposits. And you would have fallen victims to the invoices from Google and Facebook, because your digital marketing acquisition costs are going through the roof. So anyway, lots of headaches, but we march on. Look, there is a huge army of great talent who is having a go at any little aspect of banking. You know, whether it's the asset management, the payments, the lending, whatever, there is a whole army of these little Tyros underway. Far too little in Australia, but in Australia it's also starting to move. Tyro launched a fintech hub. It's exciting to see the folks there trying to reinvent banking. All right, so that's the fintech people. Let's pick out one fintech, which is Tyro, the original Tyro. It is only there because it's a brainchild of the Reserve Bank. Ian McFarlane in 2004-2005 and his counterparty at the prudential regulator, John Lakers, were frustrated by the innovation, by the lack of innovation and lack of competitive tension in the banking system. 2004, 2005, not much has changed. But they were frustrated. They created an access regime and a bank license, and nobody came except a startup. And this is unheard of. They supported a startup. Now, Tyro, the startup bank, then grew. You can see a nice little growth curve. I mean, it's easy because we start from nothing. We raised last year $100 million, the 3rd biggest private fundraising in Australia. And we delivered a cloud-based, mobile, integrated core banking platform. We invested to launch something like $22 million. I mean, we continue to invest, obviously. But this is a rounding error for the major banks. Anyway, so this is one of the Tyros. We need many more. Let's move to the 3rd part of players, which I find very interesting. So you remember Alibaba. And Alibaba has an affiliate called Ant Financial Services. Ant Financial Services starts 1 year later than Tyro. Tyro has 17,000 small, medium Australian businesses. Now, our friends from Ant Financial Services have 450 million customers. Maybe the Tyro, what do I think? Maybe $500 million in valuation? No idea. Alibaba affiliate and financial services, 60 billion in valuation. You have to imagine this is Citibank, this is PayPal, E-Trades all together. Now these folks do basically what we also intuitively thought to do, which is in the little Tyro world, we take payments from small, medium businesses, we collect them as deposits, this is data, and we use the deposits to advance funds to fund the SME growth. I mean, it's not rocket science. The problem is to deliver it. So they are even at another level because as an Alibaba affiliate, they have a wealth of data which is just unbelievable. And guess what? Mr. Ma and financial services are going global. So one of the interesting thoughts is, will it go the way of the advertising industry? So will we one day remember our cozy oligopoly and consume the banking and financial services of colonial powers? I do not know. This is why it is so important from our Tyro point of view. I mean, we obviously believe in startups, scale-ups, and fast growth companies. We think that they are our hope underpinning the prosperity of Australia in the digital century. Now, these folks need banks that actually support them. If you look in fiscal 2016, we think that the gap that opened by the declining contribution of SMEs versus what they used to contribute is an $85 billion opportunity. This fiscal year, it's probably now at 100 billion. So the question that we are trying to resolve, the problem we are trying to address is this. We analyzed that Australian SMEs waste $7 billion a year in friction of banking, in doing stupid, wasteful things, because we as bankers don't do the job. And Macquarie estimates that there is a $60 billion shortfall in unsecured cash flow-based lending. Now that's huge. If you think about modern economy, businesses are moving from asset-based to IP-based. They need growth funding. That's what banking is all about. So if we could eliminate the waste, so people can run their businesses more efficiently, and if we can provide them with growth funding, we give a real go to the startup, scale-up, SME community to create the job, services, and products of the future. It's important that somebody does that job. Thank you.
I turn 40 next month, so I can still get up on the stage.
I propose the gym, maybe.
So I think one of the things that's interesting, so hello, Paul is my name. I'm the publisher and editor-in-chief of Business Insider, which is a global digital publication. FinTech is one of our major sort of core pillars of our content. But I think one of the things that's interesting is, like, obviously I'm an Irish guy. I'm a guy from Dublin, living on the other side of the world in Sydney, editing the Australian edition of a website that was founded in New York, but was bought last year by Germans for $450 million US. I'm a true sort of product of globalization. But when you talk about the movement of capital and labor, here you are, you're a bank CEO. I don't get to interview that many bank CEOs because they tend to be very inaccessible. You're now CEO of a bank, isn't that right?
That's a correct statement.
Yeah, so Tyro...
Well, I'm not the CEO. I hired a successor CEO. Gerd Schenkel, who founded Ubank, is the CEO. I'm now an executive director, whatever that means.
That's right, the ED, yes. Yeah. The founder and executive director. Now, let me step back from that very quickly. You have an amazing story about how you first came to Australia.
Yeah, we like to say we are boat people. So now the reality is that with my Greek wife and our 5 children, we fulfilled ourselves a life dream. We built a sailing boat, a 40-meter, 130-foot sloop for the sailor among us. And then the family moved onto this boat, which then was our home for 2 years, sailing around the globe, being able to experience the most remote islands of the planet. So very authentic cultures that haven't been touched yet by what we sometimes call it civilization. I'm not so sure.
You ran into a minor problem, though.
Yeah, well, basically, maybe I contribute two stories to it. One is, in the second year, if you can for a moment kind of close your eyes and imagine this high-tech super yacht blue hull cutting through the crystal clear water of the Indian Ocean. And then in the front sits my 15-year-old blonde oldest daughter dangling her feet over the water with the southern breeze drying her tears. So father finally engages in conversation, which at that age is not easy. She turns to me and says, "Dreams are there to be dreamt. Dreams are not there to be lived." For a 15-year-old. Now it translated the craving that she has for normality, for the whispering friend, sharing secrets with friends and this and that. So a big privilege, I think, of my generation, of us here all, is lots of us can they can live their dreams if they let themselves do this. Now, the dream nearly turned into a nightmare because this beautiful 145-ton yacht without fuel, empty weight, went to a sudden stop when it hit an undocumented reef with 8 knots. So that's not a very good experience. Now, fortunately, there was some blood, this and that.
8 knots is pretty fast.
Huh?
8 knots is pretty fast.
Yeah. For 145 tons to run into a wall is not good news. So now it turns out that German-built aluminium hull was able to absorb this quite well, and under our own keel we went to Brisbane. Australia was not on our plan. But this was the closest place where such a high-tech 40-meter yacht could be pulled out of the water and examined for structural damage. And you know how one thing leads to the other. My wonderful wife organizes a trip to Sydney with the kids. It's beautiful 14 days with wonderful, friendly people. There are the eastern suburb schools, which compare very favorable to public German or French school. They have marketing, so they said, oh, 5 children. So my wife fell under the spell of Sydney. I was then informed that she and the kids were staying in Sydney, and I drew my conclusions.
So welcome to Australia, Jost. Look, here's one of the things for me. I used to sail a little bit when I was a teenager, and I've often thought that business is a little bit like sailing, or leading a team, a little bit like sailing. You've got a lot of information at hand. There's a lot of ways that you can act on that information. Your job as the skipper is to get that boat going, if you're racing, as fast as possible, right? Set the correct course, make sure you've got the direction right, and obviously don't screw it up after that, right? Point the boat in the right direction and get it going. What have you taken from sailing that you apply into business? And let me just put some context around this. Jost and I were talking earlier, and we could talk about German politics and sailing for the rest of the afternoon, I think. Let me ask you about what you apply from sailing into business.
Okay, I've never really thought about that. This is compartmentalized.
Terrible question.
But one thought I'm having is that you know that real entrepreneurship that makes a change that really betters outcomes for people often, nearly always requires somewhere to go against the stream. And the interesting thing about sailing that comes to my mind is that the Arabs invented the Bermuda sail. Before, it was unthinkable to sail upwind. You know, the wind needed to push you. But how would you sail upwind? That makes no sense. Now, the Arabs cracked this with the sail being a foil and using the pressure differential of the inside and the outside. So suddenly, you can actually use nature, the wind. You're not wasting fuel. You're using what is there, beautiful nature and the forces of nature, to advance versus the upwind goal. That's actually absolutely fascinating, and that's what successful entrepreneurs, I think, need to do in our world. They have to play with the opportunities that we are being given to swim upstream. Now, that is what strikes me as an idea. Now, if you want to have the normal analogies, it is obviously that particularly world cruises on the boat, you're master over life and death. You need to have the blind trust of the crew, and all this is applicable to challenging businesses and hyper growth, I think. It's also not about the short speed, the sprint. It's about the marathon. It's about getting there. It's about finding a course, and often you have adversity. Now, if I move away from the sailing analogy and ask myself, what is it that possibly drives the best and brightest to try something on their own, to become entrepreneurs? You are facing this with yourself, and you're facing it with your kids and with the neighbors' kids. You know, what is driving these people? And I think there are some effects that drove it for me. It was not the sailing. It was the unconditional love that I experienced from my parents, so I was self-confident. Then it was facing adversity. Now, if you're living in a five-star operation, you might want to move into adversity by changing into challenging circumstances. You know, I went to foreign countries. I did things I had no clue about, and so overcome adversity is very important. And then we know we as a community, we have to be encouraging and then celebrating the failure. But I mean, that's all obvious.
And I think there's an important question here, because government policy can play a role with this, right? So you worked you were in German politics for a while. You worked for Gerhard Schröder, actually, who's, I think I explained it to you earlier, he's my third favorite German chancellor of the modern era. After Helmut Kohl obviously being number one and Angela Merkel being number two. But how would you characterize the political environment now in terms of policy support in Australia for innovation? Because where you are, you're a fintech, very small company, small amounts of capitalization relative to other financial institutions. But you've got a banking license. You are a bank. So how do you characterize, what's your view on the political policy support for what fintechs, Tyros, as you call them, are doing?
Yeah, well, it's interesting for me because I lived Germany at a certain period, where in Germany there was, we were all depressed at the time that we were losers and we were doomed and it was all awful. That's the year where Schröder takes government, and all the task was to change the mentality to prepare for change. But there was sense of urgency. Now, the interesting thing about Australia, there's no sense of urgency. Here we have complacency. Now that's an enemy. So I think there has to be a significant wake-up call. There is momentum building in the narrative, as you noticed. You know, we are talking about an innovation agenda and about sandboxes, and there is, there is talk about something needs to change to enable more entrepreneurship in the country, more competition and innovation in the country. So, but that's only a first step. We have to deliver enabling regulation. That requires a government and a regulator. putting forward harsh mandates to overcome the resistance of the banking oligopoly. So we are talking about the right things. We are not moving, and we are not moving fast enough because other geographies are moving faster. I'm always annoying my counterparties, talking about the European Commission and the UK moving so much faster than we are moving here. So it's move from narrative now to strong mandates and open up the banking, open up the banking system. There's another, I think, interesting aspect, which is we have to accelerate the aggressivity of growth entrepreneurs. I mean, we have now a few digital success stories. I've met Mike and Brooks on my board, Atlassian is one of them, and there are other ones. So this is about entrepreneurs who are not just seeking to sell out to the banks when they can afford the beach house with the check. It is about people who are very aggressive trying to change the world, and that mostly on a global scale with digital products. So enabling regulation and a change of mentality out of this complacency is good enough to urgency, aggression, growth, change the world.
I think that's a really great way to lay down a challenge to everybody who's going to hear the rest of the schedule here today. Jost Stollmann, thank you very much for sharing your insights today.
Thanks for the conversation, Paul.